Live, and I think we are live. Welcome, everyone. My name is Alex, and I'm here at iChongqing's wonderful studio and office behind me. And I have a wonderful guest joining me tonight. His name is Mario. Mario, you can introduce yourself because I know you and I both like to talk. So fire away, sir.
Alex, great to be here. Hi, friends. Mario Cavallo here. Alex, my first city ever in China was 23 years ago, and it's the city
Wow.
where you're sitting right now. It was Chongqing. I was living in Los Angeles from 95 to 98. And yeah, typical Italian American guy, born and raised in New York, but then the family moves, west for nicer weather. Mom and my brother and all, our family is in Scottsdale, Arizona. And then I moved on to Newport Beach in my mid 30s. Next thing I know, I'm making a lot of Chinese friends. That's it. Besides that, I never had a thought about China. And my friend from Chongqing, Frank, I love you, brother. Frank Lee is his name. He's still in LA, invites me. He says he's from Chongqing. I said, where? Chong, what? It's like, where's that? And he's, oh, it's in the middle of China, and you want to come? And I'm like, yeah, I'll go. And I arrive in Chongqing. Can you imagine this? Not in 1999, Chongqing and Chengdu was where I spent my first year in China, Alex, where you are now. To this day, it's one of my favorite cities, and it's 23
Thank
years
you.
later, I still say that. You bet. I can't wait to come see you there soon.
So today's program here, we've decided we've been taking a lot of notes here on these economies around the world over the last, we'll say, 3 to 4 weeks. Things have got pretty interesting, and I've spoken with a good friend of mine here, Mario. We're going to call the show today "Control Your Finances" or "Take Control of Your Financial Future." Now, just to give you a little bit of background on my financial future and my recent financial history, I was a derivatives trader at the age of 22, and I've been trading these markets for almost 3 decades now. I've been through the financial crisis on the market. I've been through the dot-com boom on the market, and I've been through the COVID 2020 fall off in March. Predicted that pretty much to the day, and following that prediction, the market fell over 43% within about 3 to 4 weeks. With a nice rebound, I'll tell you, but that was influx of about $3 to $4 trillion pushed into the monetary system here in the United States. So we're going to cover a lot of things in the program today, and how my experience and how Mario's experience, we trade through these markets, not only trade but also manage it. Now, I just want to let everyone know that we aren't offering financial advice here today, but we are just going to give you some opinions on where we actually think this market is going and some of the tools that we use to predict on how some of these markets will end up. So, Mario, a few weeks back that we were discussing this, and let's get into what I've just seen, cross my desk here, an inflation number cross from Europe. Broke a record again. Let's roll back the audience here and let them know how we got to this inflation and how long it may last for. Maybe you can give your insight to that to some of the viewers today.
That's right. And, I so appreciate the opportunity to have this conversation because even though we're going to talk about the EU and we're going to talk about the United States and we're going to talk about China, we're not talking about them in terms of politics today. That's what I love. Our conversations for the last many, many months, as our friendship has developed, has been rooted in this idea of, well, the reason that I'm concerned about inflation, the reason that I'm concerned about interest rates, right? The reason that I'm concerned about costs of things like fertilizer, which we need to grow food to feed the planet. Oh, so inflation matters. Well, why do I care about that? Well, not because we want to talk about geopolitics. That's not this live stream. With you, it's because I want to know how to make money. If we have inflation as opposed to not having inflation, where should I put my money? Should I put it in treasury bonds? Should I put it in the US dollar? Should I put it in gold? Should I put it in crypto? Where if I'm going to put it into stocks, then which stocks? Should I put it into growth stocks or blue chip stocks? Now, going now specifically to your question about inflation, this is the monster that the Fed and Wall Street, I'm referring to the United States, and even to a lesser degree, EU and the IMF, this is the monster that they were thinking and believing since the 2008 financial crisis, when they started doing QE, when they started supporting the markets. I mean, this is what they're doing. They're supporting the markets with billions of dollars that they thought they could avoid inflation. And even people like Warren Buffett, if you don't believe anything I say today or anything Alex says today, he's a more successful trader than I am. But at least you could believe Warren Buffett. I mean, there's a guy you can believe. And even he said from the very beginning, going back to 2008, right, Alex, when the disaster hit, it was like, so the Fed's going to do what? The Fed's going to start buying our own country's bonds? Oh, that's interesting. And at some point, they're going to have to give them back. They're going to have to unwind that, and that's going to be difficult. This is what Warren Buffett said 10 years ago.
Yeah. And we're there,
because of inflation.
We're there now.
We're there, and that's the
problem.
there.
And here's the factor that I would like to give the audience, just a little bit of an update on what we mean when we use words like QE. That means quantitative easing. Basically, that is like, okay, the country is basically opening up a credit card, borrowing a bunch of money, and pumping it into the markets as fast as they can. Now, we all know that banks are supposed to support that private business, but what has happened after this, and this is the extraordinary thing that I have still, after almost 3 decades of trading these financial markets, tried to understand here, is why on earth is this market still at a 4,200 level on the S&P? Just for you guys that don't know, the Standard & Poor's index of S&P 500 is the United States 500 top countries by market capitalization. Okay, so that we're going to say that that's the creme de la creme of the U.S. Public companies. Now,
exactly.
These are trading as of a few weeks ago at record highs, when one of the major economies in the world, China, has not opened its border yet. Japan is slowly getting there, and other countries are gearing up, and these markets are trading at a high. Here is why, or at least on my opinion, on why these markets are where they are and how fast this super bubble could pop. I don't think the worst is over yet, but let me just give you an indication that when you pump $3 trillion into the banking system, there's so much money that came in after this COVID situation that the banks, they did what they did best. They reinvested it into the stock market. And now what's happened is we see companies like Netflix. Yes, 1 second, Maria, we got a lot to talk about. I see one company like Netflix lose 70% of its value. You name it. Fire away, sir. Go ahead.
No, I just want to say the chart. Just what you were saying. I just yesterday I saw a chart, and it was a chart that showed the amount of money with the Fed chart, and the line, and it was like in 6 weeks they pumped $2.6 trillion into the market in March 2020, which was like, and it was something about 80% of the whole money supply. Yep. It was created in the last 2 years, or just stuff like that, which the average guy, even me, can't comprehend the kind of numbers we're talking about.
And we've got some comments here from Hang. Hang, thank you for joining the program today. We greatly appreciate all our viewers out there. From Facebook, if you're from Facebook and you want to get into the interactive part also on this program, don't forget to come into the iChongqing's Facebook site. And of course, Mario has streaming from his channel as well. So if you're viewing from Facebook or Twitter, go around, check all out our socials. You'll find some friends to chat about there. But Hang made a comment here. He says, when you quantitative ease, they are printing more money and it is inflationary. Isn't that the truth today? We are seeing quarter after quarter after quarter of inflationary numbers that are just blowing records out. The rule book and the record book has been, blown out of the water, I think about 2 months ago. And everyone says, well, we'll get it under control. Well, let me tell you how the Fed can only get this under control. That's raise interest rates. If they try, I'm saying if they try, Mario, they'll raise interest rates. What does interest rates do? Interest rates then falls over to the property market. We all know what happens to an inflated property market, i.e., 2008 prediction by Peter Schiff. If you haven't seen it, watch his video. Peter Schiff was right. So,
He's the man.
Mr. Ma, fire away. Tell me what's on your mind.
You psychically went right over to me when you mentioned Peter Schiff. That's what was running through my head, listening to Peter Schiff telling everyone the Fed's going to stop inflation. This is Peter Schiff talking. The Fed's going to stop inflation. Don't make me laugh. If inflation is at 8%, you need 8% interest rates to stop inflation. We got 1% interest rates, and they're going to raise them by 0.5% and another 0.5% and another 0.5%. And by the end of the year, which is 9 months later, you got interest rates at only 3%. When you got inflation at 8 to 10%, how's that going to stop inflation? They're full of baloney. They're just continuing their money games. That's Peter Schiff talking.
Jesus, it's a scary scenario, for sure. It's a very, very scary scenario. And let's have a look here at what I'm putting on the screen right now. This is within about 30 minutes ago, everyone. This is the Eurozone. Inflation hits another record high as food and energy prices soar. This, as you can see here, guys, just right here. And they put that out, Mario, right smack before the future market gears up in the United States. There's a saying, put out the bad news before the show begins, right? Well, here it is here. And here comes the numbers here. Inflation came in at 8.1% for the month, according to the preliminary figures from Euro Statistics Office. Now, we are to believe those numbers are only 8.1.
Ridiculous.
Those could be much, much higher, if you ask me. And this goes into food, this goes into gas, this goes into the staples that people are basically having to live. And I've noticed these figures start to really rise. How have I figured that out? Is family starts to call you and say, "Hey, have you noticed the price of this go up?" Or, "I tried to send you a package, then it normally cost me $20. Now it's $30. Or, my mother would call, "Son, I just gassed up the car. It's usually $80, but it's $120, and my pension's not going to cover that." Wow. Fire away, sir. Go ahead.
Yeah, my brother is telling me he's back in the U.S., Scottsdale, Arizona, with his restaurants, doing okay. But he is telling me that the things of normal daily life he is finding are up 20, 30, 40%. And as an example, before the pandemic, he was going to put a new set of air. He lives in a typical nice home in Phoenix, Arizona. It's a bit of an older home, but still very, very nice. It's like 25 years or something like that. And he needed to put in new air conditioners, and he got a quote about putting in the new air conditioning systems, which you got to do every 15 years or so. And he got the quote before the pandemic, and he got a quote something like whatever the heck it was. He said to me like $8,000, and fine, he got the quote. And then the pandemic hit. I don't have to tell you that the pandemic disrupts everybody's lives in a number of indescribable ways. And next thing you know, 8 months, 9 months, if not a year or more has passed. And then, of course, he never did the air conditioners. So finally, it had mostly passed and things were getting back to normal. And he calls the air conditioning company back and he says, "Hey, I got, remember that quote you gave me for back then? Come fix my air conditioner now." I said, "Yeah, well, we'll send the guy out to re-quote that." And he's like, "Re-quote what? I got the quote right in front of me." "Oh, no. It ain't going to be that. 13,000 from 8. 13,000, Alex, from 8,000. And not only that, but along the way, how much of an increase is that? Over 50%. But he's telling me that there's other items, like items that he needs to buy as a restaurant owner that, wow, that's not available. The pizza boxes, they're not available. And if they are available, they used to be 8 cents a piece. Now they're 11 cents, this kind of thing. Alex, you say, you don't think about it too much. No, these are 20, 30% increases to the bottom line of the middle class person's budget, who already, especially in America, come on, they're flat broke.
Yeah, and we're not talking nickels and we're not talking nickels and dimes anymore. We are talking, this is life-changing numbers here. And I just want to go into detail and give you one example, and then we'll talk about how China has kind of buffered itself, not completely from this, but how they've kind of improved that. And we're going to get into that about the rail system and the Belt Road in a moment here. But I'll give you one example. I had a brother-in-law who requested a quote on his house to get full renovations in Canada. Canada is a country that has plenty of natural resources. Of course, it's got oil and gas and lumber and all that. But transportation is a big thing because it's a massive country of, over 8,000 kilometers from end to end. But the important part here is to understand on how is this life-changing? Well, I'll give you an example. Brother-in-law requested a quote to renovate his house last year. Was quoted about $100,000 to do full renovation. No problem, sir. Everything is fine. You'll have your house renovated. He decided, well, it's during COVID. I'm going to wait. I'll wait till COVID blows over. I will get my house renovated. Well, as of about April of this year, he called up his contractor. The contractor came by and he says, okay. And my brother-in-law says, yes, I would like to get this building ready to go. And he says, I'll give you a 20% deposit, which is 20 grand. And the contractor says, wait a minute, when did we do this quote? And he says, well, we did it, about, 12 to 14 months ago. Came back, same property, same items, same renovation, same requoted at about $181,000.
Yeah.
So that is a massive increase. Now, when I say life-changing, these are life-changing in many factors. Used cars are going through the roof, skyrocketing. Why is that happening? Logistical problems. You can't get chips for the cars because it's all about logistics. And that's why we're reading in the side of these quotes here. We're talking, Hang is obviously, a lot about this, but let's focus in on this new railway link that was put into operation just recently. I'm not sure if you're familiar with it, but from Laos, this logistical railway that's been put in there. Do you know much about this?
Just look, enough. I mean, I'm very familiar with China and the fact that China has done what they have created. Governance here has built and created a society for the people to be able to live in a good society without the need to be filthy rich. You can't get ahead in life if you need a $400 a month car payment just to be able to get a job. Right. So they put in this amazing public transportation system, the subway systems in all the major cities. In Shanghai, Shenyang here now has 4 lines, and cities like Shanghai, Beijing have like over 10 lines. And in addition to the subway system, the modern subway system, they put in the rail lines, right, for transportation. And they're inexpensive, the high-speed rails, the Chinese word, right, Alex, the gaotiers.
Yep.
And in addition to that, and I'd done some work in the past for the big logistics company, the French one, the French logistics company. Oh my gosh, the biggest one in the world.
There's lots of them out there. DHL's German.
Yeah, and the French one.
I know where you're going with it.
Anyway, so besides transportation, this is the point. Going to what you're saying here. Besides transportation for the public, for the people, to be able to get from one city to another in an hour and a half and be able to do that for $5. Wow, that's for the people. Okay. Now, the backbone of an economy, like in the United States, is trucking. Okay, so that's the backbone. That's the veins in the blood of the economy. Getting goods around in the United States is trucking. But internationally and here in China, a big part of it is the build out of the rail system, not only for the public, as I just said, quality, low cost, effective, fast transportation, but also for logistics and supply. Along that line, in this last year, we've had it, as you mentioned, the very famous rail line, which Alex, correct me, from Kunming all the way down through, and finally, there it is, all the way down through into Laos. Amazing,
beautiful one too.
Not to mention the other rail lines going all the way, carrying cargo now. Millions they're at, I don't know how many hundreds of thousands of tons, or if they've hit 1 million tons yet, of cargo lines going across the BRI, okay, from China by rail getting the goods all the way into Eurasia, and then and as you just said, the one going down into Laos. This is supply chain. This is a miracle. And
I mean,
even
extremely important. Yeah. Massively important. And this article here was written from one of our reporters here, and she actually went down and visited this area. So this is a video that you will want to definitely watch. You can visit it at our iChongqing.info web page here, and
your guys'
is a direct link.
videos.
This is a direct
I'm
link
interrupting
to the,
you. I'm interrupting. I'm interrupting
Go
you
ahead.
I'm interrupting you to plug you. I have to, because I can't deny it. You guys, everyone watching, you gotta watch. The reason you gotta go to iChongqing's Twitter feed is just you gotta see the cool videos with the drones, the work that they do. They just got some really great videos. You gotta go watch them all. All right, there's the plug. You deserve it, man. It's great quality videos. Okay, go continue.
Well, this is a live replay. They went down there on location, and it's quite a lovely lady that works in the office here, and a great reporter that went down there and really asked a lot of key questions. And I think it's important that if you guys want to really grasp on what this China-Lao Railway is all about, Chongqing to Yunnan, that is a must to watch. So. Another aspect that we need to now get to is we did a video about 4 months ago on inflation on food. I'm not noticing it too much here in China, but I am really, really, really starting to see, numbers. We're seeing natural gas prices, logistics. Can you imagine this, Mario? Logistics. China has been pumping trillions of dollars into this for the last couple of decades. Well, except you can just say almost 40,000 kilometers of high-speed railway is one of them. But the logistical part of this country and how it's set it up, I mean, internally, I feel things are pretty good and pretty managed here. But outside these borders, I'm starting to see some numbers that are staggering. $6 a gallon for gas in the United States. And then we do have we won't get into it too much, but we have some geopolitical issues and some standoffs in Europe, which are not doing any good for those economies over there. And that is a trade that I want people to understand. You don't see the end of this, we'll call it chain, until it breaks. And I'm going to get into what I mean is a lot of these shops that you've been buying products, let's say you're gearing up for the summer and you're in the United States and you're buying some lawn chairs and you're buying some new barbecues. That's all fine. But now we're seeing homeowners that are buying new houses have to wait 6 months for refrigerators in the United States, 3 or 4 months for washer and dryer units in the United States. These take time, guys. They go on cargo. They're not made in the U.S. They're not made in Canada. They're not made in Europe. They're made in China. Go ahead.
And they don't have the chips. They don't have the chips. Okay, this is what my brother waited. My brother got a Tesla. He waited months for the Tesla, and they don't have the chips. All of these things. You keep triggering in my mind. We talked about what are the main areas that are problems: inflation, supply chain. Shortages. When we say what kind of shortages? Oh, let's be more specific. Okay, food shortages. Well, what do you mean by food shortages? Well, we mean there's no crops. Well, what do you mean there's no crops? Well, they're not being planted. Well, what do you mean they're not being planted? The farmers plant the crops. No, they're not planting the crops. Well, why not? Because there's fertilizer shortages. Whoa. Hello, wait a minute. And there's fertilizer shortages, and then there's diesel fuel shortages. Wait a minute. Isn't that what all the trucks use to get all the stuff around the United States? Yeah, diesel fuel. And there's shortages of diesel fuel, and the price of diesel fuel has doubled. And now half the truckers can't afford to go to even do their shipping. They're out of business. Okay. So, and you look at it and go, well, there's a breakdown in the supply chain. And there's this inflation of all these products, or there's the shortages of all these products. We made our little list, and then I tweeted you or chatted to you the global wrecking ball. Right?
Yes, of course.
I'm looking at the I'm looking at the, and by the way, natural gas, right? So natural gas. Thanks for the play.
See,
Dude, thank you. I did good. I had like a 50% gain on my natural gas calls, but you were also right when you said grab them and get out, because that it's very volatile. There's, gas is up around 9 now, but we don't know where it's going to go. One guy's saying it's going to go back down to 5 or 6. Another guy's saying it's still maybe going to shoot up to 13. This is very, very dangerous, very scary stuff.
It is. And when you see natural gas up around those prices, now, just for all you guys out there, why are we paying so much attention on natural gas in this topic of the conversation? Natural gas should be on a decline right now because we're going into the warm months, but it's not.
Right.
And it's continuing to stay at high prices. Now that is going to, and that's going to come out on your electricity bills. And that's going to come out on your spending power. If you're spending on electricity, oil and gas and gasoline and refined products just to keep your general life going, these things are going to start hitting the bottom lines of Target, Amazon, Starbucks, McDonald's, all these major players. And this is the trade.
Walmart.
Sorry.
Go ahead. I'm sorry. You said it. Walmart and Target. Walmart and Target got nailed on Wall Street 2 weeks ago. And the point of that is that everyone was saying, okay, get out of growth stocks. This is the mantra. When you have inflation and rising interest rates, the first ones to get hurt is the tech and growth industry, because they don't have any profits and they have outrageously high multiple PE revenues and price to sales ratios and price to earnings ratios. So they're the first ones to crumble, to fall. So you do your asset allocation out of growth and tech and into value and retail and inflation protected. And that's Walmart and Target and Coca-Cola. And then what happened 2 weeks ago, Alex? Walmart and Target, they both tumbled like 30% on their earnings reports. So we really have disaster in the making here.
Here's the other issue that's on top of that. Imagine if the full global economy was running on all cylinders. Okay. Imagine if China's open fully. Japan just started to open up. Some of these Southeast Asian countries are starting to generate more. Those prices would be even higher if the usage was coming in and a lot of these economies were running at full tilt. We are at breaking point here. And my concern is when you are running at an all-time high on natural gas, which has predicted 3 stock market crashes, 208, 214, and 220 to the dot, to the needle that has hit, definitely. And natural gas is something that we kind of ignore. Most people ignore, but not me. and I'm seeing some other things that are starting to get quite worrying as well, is when you see these global economies that are interlinked, food shortages starting to happen, baby formulas disappearing from shelves in North America. Boy, oh boy, this sounds like trouble is on the horizons. And my concern is the following. Everyone says there's lots of money out there. There's a lot of people that are really in trouble at the moment. That's for sure.
Okay. So I said to you about 3 weeks ago, we started germinating, having this discussion together more from that economic point of view. And we talked about, we said, there's a half a dozen, if not a dozen things, each of which is a economic and societal potential catastrophe. Okay. And one side falls on monetary. Okay. Which we haven't finished talking about because we only talked about inflation so far.
Right.
And the other side is products. So imagine that we have all happening at the same time. We're consumers on planet Earth, and all at the same time, we've got triggered global shortages of oil. Forget the reasons. They're cutting off Russia because of the Ukraine. Doesn't matter why. You're cutting off the oil. You're cutting off the oil. I don't care what your reasons are. It means you can't get any oil. As far as Europe is concerned, that's a disaster for the consumer. you're talking about oil. I've got the list. Oil, which you have to separate out from oil for consumers and diesel, because that's supply, trucking, and logistics, and even ships, right? Diesel. And then, as you've already said, natural gas. So these are fundamental to driving the world economy, okay? Which is why economic people don't like the greenies. The greenies are nice people. I like them too. I'm all pro reduced pollution. I'm all pro China. My God, Alex, China is the biggest investor in green alternative energy than all the other rest of the world combined. Wind, solar, green, thermal, nuclear, nuclear. Okay, so yes, these are all very, very important, but you cannot transition out of oil, diesel, and natural gas too quickly. You're going to cause massive disruptions in the world economy, and that's what's happening. So now we got, and it relates somehow. Do you know how it relates to fertilizer? Because it does. It relates to fertilizer, which is a disaster because that leads to food shortages. Can you make the connection, explain it a bit?
Well, I was born in central Canada, and we were just miles away from Mosaic. It's a massive, we call it potash or fertilizer company. And I was recently chatting with a few of my friends back that still work for the company right now, and they are saying we're producing. The problem is even the local farmers don't even have enough to plant their entire fields. And I was like, okay, so what are they doing? And he says, oh, they're going to skip a year. Skip a year on one of the largest bread baskets in the world? Skip a year? So as I was saying, Mario, is we find these kinks in the system, or these jams, like similar to a bunch of trains jamming together.
Yeah.
And what's happened with that is that's not going to come out tomorrow or maybe next week or the week after. In 2 or 3 months, that's going to come out, and everyone's going to go, uh-oh, I had a factory that I needed these goods and I can't get it anymore. Or, uh-oh, I wanted to plant this and I can't do that anymore. Or, I've had to lay off my entire staff. I can tell you now that Amazon must be very concerned in all of this. And why? Is because Amazon is connected logistically to many things, and it also imports a lot of stuff from Asia. So those are two major things that could really rock this market. Now, you don't think Amazon's big? It's huge. Okay, you don't think companies and logistical businesses are big like Boeing? These make up a major part of the American stock market. Boeing is a major list on the Dow. And remember, the Dow is only made up of 30 companies only on the Dow Jones. There's not thousands of them on the Dow Jones. On the New York Stock Exchange, there's many companies, but on the Dow. And most people fundamentally and psychologically follow these indexes like the S&P 500. And I can tell you for a fact that I have watched these markets when that trade or that kink, as Mario was saying, comes into the system. Look out below, because these markets can lose 30 to 40% in a matter of weeks. And you pull that out of the market, and you pull the fuel out of the market. Yeah, you pull the fuel out of the real estate market, which is inflating numbers. I'm seeing 30-year mortgage. I remember when I was born, hey, son, go out and buy a house, take a 10 to 15-year mortgage. You'll be all right. Now it's, hey, daughter, how are you? Go and take a 30-year or 40-year mortgage out on a motorhome. I mean, that's tough. And Sue has a thing here, is how is the real American family daily life under inflation? I think if you're in the top certain percentage, you're okay. But if you're just making ends meet, you're living paycheck to paycheck. It's pretty crazy.
Alex.
Yes, go ahead, sir.
Oh, okay. It's just, I want to say that everyone's freaking out a bit. And again, you're successful as a derivative trader. I'm new. newer than you as a derivatives trader, and I've had some great trades, but I'm not going to say I'm successful yet, but you're truly successful at it. And it's very important to point out that we have to go beyond saying, oh, the market, like the S&P is down was down 20%. Now it's down like 16%. And the NASDAQ was down 24%. But it is not, to just say that is not good enough, because you have the majority of the highly traded quick list, Walmart, Target, Netflix, Facebook, Snapchat, PayPal, how many others are not down 20, or Nvidia, okay, not down 20%. These stocks are not down 30%, not down 50%. These stocks are down 60, 70, and I think in the case of PayPal, it's like 80% from their highs.
And
now,
they're not
supposed still viable companies, but they're down
and they're not
that much.
And the thing is they're not included in these indexes. They're not included in the Dow Jones. They're not included in the S&P 500s. These are the things that capture the headlines.
And we said it. By the way, we said it because, again, we're talking economics today. And when these things pop into my head, it's very important for the readers to hear them. We were saying, many analysts, these guys are all smart. They all know what they're doing until they don't. But we were saying that all these stocks in the markets were tumbling, right? Mm-hmm. They were all like dominoes, right? But many of the analysts, you and I were discussing it, were saying, but the last two giants left standing who didn't fall below their support points was Tesla and Apple. And 2 weeks ago, they went bye-bye. Tesla blew it. Tesla blew down past 800. And I said, as soon as it does, it's going to go into the sixes. And that's exactly what happened in like 3 days.
Yeah, I remember that call.
That's right. And as soon as Apple broke 159 or whatever, it was going to bomb. And sure enough, it's down in the 130s. Now, this is before the recent bounce recovery. So the last two major famous stocks holding up the market,
the
Tesla
darlings,
and Apple, they fell. The last two fell. Humpty Dumpty, they've all fallen off the wall. What the hell? Now what?
And and if you're an investor in those shares, I mean, you have to do your research in these things. You've got to follow on how Apple gets its product over. Is there going to be a logistical problem for Apple? Probably. Is there going to be an increase in shipping in the next couple of years here? Probably. So these are some things that tools. We're not going to give you a recommendation to buy or sell any security because we're not here to give you investment advice. But that little disclaimer. But what I'm trying to say is you got to follow the logistical lines on how this works. And something that I want to kind of bring out to the audience is, it might not be a bad idea to go into that local hardware store that sells seeds for growing carrots and, preppers. They're calling preppers. That word prepper is starting to become very, very popular in North America. It's people that are preparing for things that could go bad quite quickly.
And of course, in Russia as well. Yes.
Of course, people think we use that funny scenario, Mario, where we say to people that they're wearing a tinfoil hat that are growing gardens in their backyard. Well, not the case. I mean, these are quite serious events that are coming. It's not all doom and gloom. There could be some really bright spots in here, but it's quite serious. And we're just going to address, and maybe you can help me address this question here, where Catherine says, where did the $5 trillion in pandemic stimulus money go in the United States? That's an interesting question.
What a danger. Well, it's such an interesting question. It borders on dangerous, right? Because so much of it, where did it go? It didn't go to where it was supposed to go. So much of it. I mean, this is the problem with, look, Ayn Rand said it very well in Atlas Shrugged, which is that the classic, which is that, got capitalism. And when capitalism finally evolves into what she called mutant capitalism, and that's where we are, and that's when capitalism becomes a destructive force, not a good force. good. And this is where we were at with the 2008 and 9 financial crisis. And since then, it's only gotten worse, because if you look at where 5 trillion of stimulus went, what was it, like 1.2 trillion of it? Even when they passed these bills in Congress, well, we're going to put $3,000 a month in every household's pocket for 6 months to take care of the American people. Okay, sounds good. Well, where's the other 3.8 trillion going to go? Oh, we're going to give that to the trillion-dollar corporations who are already worth trillions. Oh, thanks a lot.
Yeah.
You know, I mean, this is the problem, that capitalism has become completely corrupt and unfair for the balance in the societies. And okay, again, let's not talk about that from a political point of view. Let's talk about that from this economic point of view. Why do I care? I'm an individual household investor person guy, right, with a family to take care of. And you say, oh, there's inflation. Well, how can I be smart? Is there inflation? Hey, Mary, honey, you noticed inflation? Oh, yeah, honey, I go shopping all the time, and there's a lot of inflation. The prices are what? Okay, so we got inflation. Well, what does that mean? Well, that interest rates are going up. Okay, now I can give you some advice, which is, I'm not giving you advice as a financial advisor. I can say to you, we have inflation, which means we have rising interest rates, which means we know bonds are going down, because bonds, the relationship between bonds and interest rates, this is very fundamental, is an inverse relationship. As the interest rates go up, the value of the bonds goes down. Simple thing. This is not investment advice. This is just what they teach you in Economics 101 in school. As interest rates go up, bonds go down. What does that tell you as an investor? Not to buy bonds. Hello, you don't want to buy bonds. Bonds go down. However, there's a conflict with that, because there's risk on and risk off. Bonds are risk off. The stock market itself will no longer be benefiting from the Fed's $80 billion average of monthly pump QE. Some people call it the Wall Street's monthly cocaine shot, right? The Fed buying. That has been removed. That is gone. Now that is gone, in a risk-off environment, you will not buy stocks. You will not buy NASDAQ growth tech stocks. You will buy bonds. So we got a conflict. One story says, in an economic environment of rising interest rates, you wouldn't want to buy bonds because they're going to go down in value, obviously. But on the other hand, we're in a risk-off environment, and that's where you do buy bonds. So we've got opposing forces, Alex. And I want to say, we've got opposing forces, and I want your thoughts on this, because again, you're the successful derivatives trader on the show right now. And I wrote it earlier, I'm going to find it. Okay, we've got this conflict, and here I wrote it right here. Alex, we got a tug of war between inflationary forces and deflationary forces. Okay, we got rising rates, we got mortgage and housing rates going up, which means that we could have a housing crisis, which would drive housing prices down, and a credit crunch, which is extremely deflationary, not inflationary. Kathy Woods has gotten her butt beat by how her stocks have gotten pummeled, but she keeps harping on the deflationary scenario. Okay, how do we make heads or tails out of all of this? Do you have some thoughts about it? I think you're a lot smarter about this stuff than I am.
My thought on this is very clear. Just because the stock market's going up doesn't mean you're making money, because you got to follow inflation here. If a dollar could buy you this last year, but only it can buy you half of what you bought last year.
Yeah.
If your stock portfolio went up only 10%, that's not covering the increase. You see what I mean? So you might have $100,000 invested and you made $10,000. Well, if you were going to buy something, let's say for $100,000 last year, but it's going to cost $200,000 this year, you're 90,000 short. So the market is a nice way to make people feel all warm when they're invested in it. That's one thing, is when they cash out the chips and walk out the door and they say, well, wow, I remember when I invested, the price of this was pretty cheap, so I'm going to, go buy that. And don't forget, when people are selling their apartments now and they want to get back into the market, they're buying into the same market. So they might downscale a smaller house and say, well, okay, I had a house, it's worth 500,000. It's worth, I'm going to sell it for 500,000 because I made 200,000 on it. Now, if you're in a country that doesn't penalize you for selling houses and capital gains, good for you. So you make that $200,000 profit, you put it into the bank, but it's fighting inflation while it's at that. It's fighting inflation that has just risen over 8% in one quarter, okay? And another quarter, and another quarter. So you're behind the 8 ball on that money that you've cashed out. Another thing that a lot of these municipalities love to do is they don't want the price of your houses to go down. Oh, no. Why not? Very clear. Most houses in North America and Europe have private tax on that property. It's called property tax. Now, some of the European countries still haven't done that yet.
Wicked.
But whoa, do the municipalities? Yeah, the municipalities love the property tax game because you don't really own your house in North America. On paper, it'll say freehold. Yes, you're the freehold owner. That's you. But I'll guarantee you this: don't pay your property taxes for 1 year and see how long you actually own that house, because the municipality or the regional government has the ability to go in and say, didn't pay us taxes, he's in default of those taxes, and in that title deed, guaranteed, they can fire sell that house on you, or they can even take it to pay those property taxes.
That's right. Let's talk about it, and let's compare with China, because you brought up an incredibly important point. I was like, imagine that, from my family back in America, someone passes away and you inherit a, let's say a $700,000 house, which is not even that much money back in America in the current market in some nice big city like, say, Phoenix. If you inherit a $700,000 house and I inherited a house free and clear. Great. I'm so happy. You need, what is it? The property tax is 2.2%, I think.
High. Some are even higher. I've seen some as high as 3.7.
Hang on. I want to say, okay, Phoenix. I'm going to type Phoenix, Arizona.
Yeah, Phoenix is one place, Phoenix did at one point have a pretty low property tax, Mario.
They do. They have it. No, they have it. What is it? Hang on. Here it is. Let me see here. Phoenix is not too bad. Yeah, Phoenix is not too bad. Okay, how much is property tax in Phoenix, Arizona? Right, 678. Okay, 0.67. It's 0.67. So that means you owe around $4,500 per year that you have to pay in property taxes on if you have a home valued at $700,000. But here in China,
true. But hold on to that, Mario. Hold on to that thought. You're paying that annually. Okay, that's 1 point annually. Then you're breaking that down. So let's say you're saying, well, you pay X amount of dollars. So I want you to hold that thought for a second. And let's say that person has to pay $7,000 a year, right? He has to generate probably $13,000 in income minus the income tax that he has paid on that money, just to pay that $7,000 down.
That's right.
To pay the net. So in fact, that property tax is not really 0.67. It's actually 1.3.
It's 1%.
And then as these prices continue, and Hang has said it right here, inflation is too much money chasing too few goods. So it's not a property boom, it's a property super boom. Okay, you've heard it. And that super boom, when it expands all prices. So now you're getting inflation on what people feel like. They might go out for dinner and say, yeah, my house is worth 700,000 or it's worth 900,000. Well, okay, yeah, but if it was worth 350,000, you'd be paying less taxes on it. And they would say, well, yeah, but it's worth 7. But you still need to live in the house. You haven't sold it yet. So you're basically your dividend, I'll call it, to the municipality has gone up, and it will continue to go up. And then when the dam bursts and everything pops and everything blows up, like the housing market, which still hasn't recovered, by the way, in certain parts of the United States of America, but when it blows, and that property prices deflate, is there going to be first-time buyers standing in line to buy a house that's lost 50%? No, because then the job market follows it, the construction market follows it, the home builders market follows it, the municipality is cutting staff because they can't get the tax revenue anymore. The game is up. Have we seen this happen before? I don't have to get out a crystal ball to do it. I just got to go back to 2008 and see what they did to that U.S. economy. And I'll tell you, there were some Chinese people sitting at that table when America was in deep, deep trouble in 2008, saying, we're going to write some checks to help you guys out. I don't know if you remember that.
You brought up so many things, and I forgot to mention it, or we forgot to mention it earlier. What you just said was not just a chit-chat passing point. Big time layoffs are coming. It's happening.
Mm-hmm.
Big time. It's happening. Okay. I double checked the property numbers. Arizona is lower than the national average on a $500,000 home. Arizona is only 0.7%, 0.6%, but the national average property tax in the States is 1.1%. It's $5,500 a year. You say, oh, okay.
Wow.
Well, listen to
Wow.
me. Alex, that's $475 a month just to own your home free and clear.
Pre-tax.
Free and clear. Pre-tax. I've got to earn,
wow.
and I'm on Social Security and retired. I've got to earn $700 to pay $475 in property tax in the land of the, the land of the free and the home of the brave. And it's, it's better. And they say, well, it's better in America to own because you really own your property forever. China, they don't let you own your property. You, by the way, the rules in China, people don't know this. You don't own the land. You have a 70-year lease of the land, but you do own what's on the land. You own what's on the land. Those assets are yours. You just don't own the land. Okay, fine. But there's also no property tax. $475 a month just in property tax. $400 a month just to own a car so that you can satisfy your employer who says, hey, dude, you want a job? You need to be able to get to work. And there's no buses. There's no subway. You got to be able to get to work. You can't take a taxi. It's $30 to take a taxi. Okay. That's $1,000 a month. And you haven't even gotten started yet in the United States of America just to live.
Now, I've got some bright spots I'm going to bring up here. But just before I get into the real bright spot, I think that's going to happen is, and once again, as we're talking about this inflationary issues and this property tax and where does it wind up, I want the viewers to write this word down or these two words down and just put a double underline them. When you start to watch commercials on TV called reverse mortgage your home, reverse mortgage your home, you know that this economy is about to go down big time. And what a reverse mortgage is basically they'll go to elderly people that can't afford what Mario was just talking about, $500 a month, pretty hard on a pension. They will go and say, hey, Ma and Pa, you have a nice little house. It's worth $600,000. You don't plan on giving it to another generation. Maybe not. Maybe your kids are old enough. They have their own house. We'll reverse mortgage that for you. But we'll make sure that you will be able to always have a house. But when you die, your house will go to the bank. Now, to most people, they think that that's a pretty good deal to take.
You get an income from it. They give you a monthly income, right?
Yeah. But that monthly income now looks good at current levels, but at an 8.3% inflationary, oh boy, that number, that I'll give you an example. Canadian pension with old age pension nets you about $1,200 per person per month. Now, if you did a reverse mortgage on, I don't know, $300,000 to $400,000 home, you'll come in at probably about $850 to $900 extra on top of that. And if you're a married couple, you got 2 pensions in there, $3 to $4 grand. 3 years ago seems pretty good. How do I know that? That was my mom. And now it's like, son, wait a minute. We reverse mortgage the house. And this is an example. We reverse mortgage the house. We got our pensions. We may need to seek a line of credit and get some credit cards out, because our electricity bill that only used to be $150 3 or 4 years ago is now $300. Or our natural gas that was $125 is $250. Those tires that we used to put on the car each season, were about $400. Now they're $900, and that car that I want to buy is triple the amount. So what do? You're in a rock and a hard place, and it's difficult for people to do that. Where I see the silver lining, and I think the timing could be impeccable, is
you're not going
China.
To say crypto. You're not going to say crypto. I know that.
I think if this country even remotely signals that it will start to open, all bets are off on the market, because China in 2008, when the world economy was pushed against the wall, they came through. And if anyone says that they didn't take a major part in pulling the world out of a global slump, then I have got some books for you to read. I've got some videos for you to read, and I've got some stock charts for you to sit back and look at what happened when they came in and they pushed the button. Now, this could be wishful thinking from us, because we have no idea. Mario doesn't know. I don't know when this economy is opening here.
I don't. I'm looking at it. I mean, I'll brag. I'll brag for a moment for the sake of the conversation and say, well, I know China as well as anyone could know China. I'll say that. Well, now that I said that, I don't know a damn thing, right? But I know it as well as I know any country, and I don't have any idea. I actually don't believe they're going to open up the border. I actually even feel that they are passively aggressively allowing the foreigners to feel like they don't want to be here anymore, and if they want to leave, they're like, go ahead, leave. We don't. You guys have treated us so badly for the last 3 years, 4 years, 5 years that we actually, the truth is, we don't care. We want you to leave. It's like when you want to make a girlfriend go away. You don't tell her you don't love her. You just don't treat her well, and then eventually she gets sick of it, and then she breaks up with you. I think that's what they're doing, but I'm speculating. But I do know this country really well. So now, hang on a minute. If what you just said is true, it will happen, as you said. We just don't know if it's going to happen. If they open it up, if they start loosening up the COVID policies, like by the way, I think that the new 48-hour COVID test policy to keep everyone safe and keep COVID under control is the most effective, amazing, miraculous policy plan ever. It's amazing. But I just want to say this one last part of it and then go.
Yeah, sure.
It's what I just said. It's a miracle. It's a miraculous solution. But it can't remain 48 hours. They got to move it to once a week. If they move it to once a week, then this country could go forever with a once a week COVID test. We could survive that. 48 hours too restrictive. So if they do open up, as you're saying, that would be the equivalent of China opening up and supporting like they did back in 2008. That would be the trigger and the boom to say the bottom of the market is. I go along with you on this. Well,
it's something also to be said that a lot of people, like I have taken the Chinese vaccination, and at an early stage, people were saying to me, "Oh, well, we're not sure," and still to this day, they'll say, "Well, it's not that effective." Well, wait a minute. There's 1.4 or 5 billion people here with one of the lowest records in the world, and then everyone says, "Well, yeah, but the numbers." I'm living in one of China, right behind me, outside that window there, everybody, if you're not aware of it, is China. And I'm living in one of the largest cities on the planet right now.
Yes.
Okay. So there's
densely populated insanity,
yes,
man.
massively. If there was an issue, I would have seen it. I would have walked by it. But I can tell you, and we've made video about it, the second that there is an issue, I'm not going to say that everything is done right, because a lot of this is a work in process too, okay? But from what I've experienced here, and I'm not going to talk about other parts of the country, because some other parts of the country have gone through some very difficult times and still continue to go through some difficult issues. But for here, if something remotely is, they feel is an outbreak, it's immediately contact tracing apps are in rock and rolling. The COVID tests are in full force. Maybe the work from home mandate comes right after that. It's tic-tac-toe, okay, and it's organized, and people are on their phone, and people are looking on their phone. This isn't an app that is kind of like, hey, my neighbor was at a drugstore 4 weeks ago, maybe I have it. No. These apps, they know what is going on. China's used technology, and they're not saying that it's perfect, but I can tell you that they applied it systematically. Yes, that's it right there. Those are the green codes that we're talking about. We've gone through, and I take that everywhere with me during the day, because there's no, let me rewind here a bit. Just before I came to Thailand, or to China, I was living in Thailand, and Thailand went through a brutal lockdown. Okay, I would say it's almost 18-month lockdown. And
so did Italy. So did Italy. So did lots of countries.
And the economy still has not recovered. Just now, they're opening their nightlife. I think we're getting on to almost 2 years here. They couldn't get the contact tracing in order. They couldn't get the vaccination. It was a colossal nightmare. Who are we? Okay, and I'm going to use that word, foreigners. And I want the audience to really listen to what I've got to say here. Everybody is trying to give China advice on when to open. If we are to believe, I don't know how many countries in the world, 190 plus or minus 5. Okay, can we agree on that? If we are to believe another 190 countries to give us advice on how to fight COVID or how to properly do it, I would pretty much say all 190 had a pretty failed process, and they decided to just let it rip. And if that is the outcome solution for China, I'm sorry, guys, but they're not going to buy it. And they're going to continue on that game plan, and frustrating it is. But the silver lining here is when this market opens, they're just in Southeast Asia. These countries are going to be different than what they were going into COVID, right? They're very different, because now you have that new railway line in Laos. That is going to be changing things. That is going all the way down to Thailand. Thailand's connecting into this system. The BRI that China has been pumping billions of dollars into making, those logistical lines are finally going to get their glory day. And it's a good day for Southeast Asia and, a majority of Asia moving forward once we get through these dark clouds. So if we can hang on for a little bit longer here, I think we're at that point now where everybody's feeling it. You know what I mean, Mario? Everyone's kind of going through the motion saying, when's this going to end? But that could be the catalyst to some very good years moving forward here. Got to remember, in that 2008 financial crisis, and Hang, thank you for bringing that up. The PRC bought 1.3 trillion during the financial crisis. And I was going to add an extra note to what you were saying there. It was bonds. China put their money where their mouth was, and they stepped in and got behind the Americans and went in there. So that's why I kind of have that feeling that we might have a little bit of deja vu here, where I think I can tell you, if China opened, the American markets would be on fire for weeks, and the logistical lines would get caught up. I think the whole world would have a boost of energy. I would be boosting. I would be, doing probably traveling a bit if it could. Go ahead, Mario.
No, I just there's no doubt about it. And in the meanwhile, though, I have to say that you said something to me that caused me to want to check, and I'm amazed. Dude, did you know while we're talking, futures reversed? They were up and now they're down. Futures reversed, man. They're down. The S&P was up 0.5%, and now it's down 0.5%. That's a 1% flip in the last, just in the last hour and a half while we've been talking. Maybe you and I jinxed the market. I don't even know why. I don't know why.
Yeah, it's a pretty and we've seen some major swings in these markets too. I mean, it's not just about the stock market; it's about everything. And in the long run here, we've got to really look at how we get out of this mess. Is the world just in wait mode for China to get moving, Mario? What's your thoughts on that?
I don't want to say the world is in wait mode, but no, the world is not in wait mode, but the world is definitely watching to see whether what China's going to do. Everybody absolutely knows that. Oh, by the way, just in case you doubt what I'm about to say, everybody knows that China is now the world's largest safe, stable, successful, capable, and civilized country on the planet. Holy guacamole, Mario just said such an extremely positive statement. Could that possibly be true? And the answer is absolutely yes. I can easily tick the check boxes off to easily demonstrate that statement. But I forget all that. Forget just from an economic point of view, in case you're wondering about America's desire to smash China and stop doing business with China and all of that. I just want to, we've been getting a lot of the rhetoric, and we don't want to go into the politics today. I just want to mention the economic reality, which is that United States imports from China over the last year and a half are up well over 20 more percent. So whenever anybody says there's going to be a decoupling, so the country that's saying we need to stop doing business with China, they're bad and all that. Oh, and we've imported more than 20% more from them in the last year and a half. So no, I don't think that China is unimportant. So in this respect, everybody's looking at China going, okay, this is a really important market that determines all of us. So why? So what I don't understand is why give them a hard time? Alex, why give them a hard time? China needs to do well so that the rest of the world can do well. And China needs to open its borders as soon as it can and do well and trade with the rest of the world. And the better China does, the better the world does. You know it and I know it. So stop trying to hurt China.
Well, everybody, I agree with you, Mario. Mario, you are a firecracker to have on this show. And we got our background music coming in. That means that we're wrapping up the show, guys. And I just want to tell you guys all here that if you aren't aware of Mario's channel, I've listed it below in the description there. We have a lot more to talk about, and you guys are going to see us a little bit more soon. We're going to bring on some more guests probably in the next week or two here and see if we can kind of get this show gathering a little bit of momentum, and I'll probably bring in my audience as well from my other channel, and we can really let it rip. All right, Mario, thank you very much for your time, sir. You've been a great great scholar to this program. My name is Alex here, and I'm at iChongqing here, and I wish you guys all a very safe, healthy, happy day, and we will talk to you guys soon. All right, from Mario and I, you guys take care. Stay safe.
Thank you, Alex.